that the market wants it.
Right.
Should the Fed feed the market?
I mean, the reality is that the market has been winning. The market continues to get what it wants, and I think that'll happen this time around too. And I think one of the other reporters noted that sort of only 7 members are looking for cuts versus 10 who do not want to see any more. I think you have to ask, but where are the voters? And I would tell you that the voters those 7 people that are looking for cuts, they're probably all voters. So I think I think the market's going to get what they want. The voters are going to get what they want. I think there's a bigger question about whether or not they're going to cut sort of after the October meeting. I think at this point I don't think it really matters. I think if the data sort of deteriorates,
so you think they will cut in October? You think they will cut in October?
I think there's no question that
Kevin, you're smiling, you're nodding.
Yes, I definitely think that they're going to cut in October. The Fed has been letting the markets lead the way for the last, 3 meetings. And I think that this one is no different. When you look at Fed funds futures, they're saying, it's 75, 80% chance of a cut in October. And I think that that's going to happen, definitely.
Some would say that the markets have been leading for the past year. I mean, ever since the Powell pivot, it's been the markets that has driven the Fed to change the tone, to change the stance, and the market has been right.
Yeah.
I mean, would you concede that or no?
Yeah, I think that the market has been right, but it comes a point, though, that the Fed's going to have to stand on its own 2 feet and say enough is enough, because think about if we keep cutting when the economy is actually doing well, what is going to happen when things go south? We're not going to have any dry powder. And Fed Chairman Powell said yesterday that part of their toolbox was that negative rates was not part of their toolbox. So where do we go? What are we going to use?
So, Tom, does the economy warrant more rate cuts right now?
So I think what we have to ask ourselves is it hurting? And I think
Is what hurting?
Cutting rates.
Yeah.
Is cutting rates going to hurt in some way? In other words, if we actually don't need cuts, by cutting, are you setting ourselves up for some imbalance down the road? And I think the short answer to that is probably not. I think that I can make the argument for, sort of multiple years down the road, if we actually get out of this and things actually do really start to sort of pick up again, that you could create one of these imbalances and you sort of overusage of credit, et cetera. But so many things would have to happen between now and then for that dynamic to play out. So I think from the Fed's perspective, they view this as sort of a low-cost way of helping the market continue to sort of embrace, hey, things are actually not too bad and we're here to help. Let me be clear. I'm telling you what the Fed is thinking on this. If I was sitting at the Fed, I would not be cutting rates. So again, a short answer to your question is I do not believe the backdrop actually warrants cutting rates. But in an environment where the market is demanding it, and you run the risk of creating this market dislocation, then sure, that's what the Fed is thinking right now.
Kevin, it sounds
I hate that approach, let me be clear.
Yeah.
That's where we are.
It sounds like you're worried that if we are in some sort of slowdown or a recession, that the Fed won't have the dry powder, so to speak, to fight it off, so that downturn could be deeper and longer because we can't bank on help from the Fed.
Yeah, that's exactly what I'm thinking, and so that's why when I look at where we are, you're at a 50-year low on unemployment rate. So the Fed has met that mandate. Inflation is below their 2% target, but the Fed has also created a third mandate, and that third mandate is to worry about global growth. That's not part of, the U.S.'s mandate for the Fed, but that's what the Fed is now looking at. And so in thinking about, global growth, I understand why the Fed is making these cuts, but at the same time, they have to be very careful that we don't go too far because the toolbox will be empty.
All right.
Just to that point, I would say, but let's be clear, the Fed is just going to roll into more QE. Right? I mean, when things actually do deteriorate in earnest, they're just going to go from whatever cuts that they have left to just rolling into another round of QE. I mean, that is where we are at this point, and that's that.
So why ever sell bonds?
Yeah, no, I agree. I think the yield curve is going nowhere. I mean, I think 10s are going nowhere. 10-year yields will stay more or less where we are.